Good day and welcome everyone. Thank you for joining us for today's SDP Faculty Development Program 4. Today we are having a fourth SDP session on the topic Issues in Banking by Dr. Naveen Kumar. As we all know, Milagres College Mangalore, Padua College of Commerce and Management Mangalore, and Government First Grade College Kavoor, in association with IQAC, organizes Contemporary Issues in Taxation, Investment, Banking and Analytics, a series of 5 days SDP. As of now, we had a very interesting SDPs on analytics, taxation, and today we are going to know more about the very interesting topic issues in banking by Dr. Naveen. A small cheer and great welcome makes a merry feast. Without any further delay, I request Mr. Denzel Pinto of Milagres College to welcome today's resource person and the gathering. Over to you, sir.
Thank you, madam. Good evening, one and all. I am glad to welcome all of you. Firstly, I am happy to welcome and introduce today's resource person, Dr. Naveen Kumar K. Currently, he is working with Reserve Bank of India, NIBM Pune. He is mastered in economics with first rank and gold medal from Mangalore University. His PhD economics from Institute for Social and Economic Change, Bangalore. He is having around 20 years of academic executive training and research experience in the field of economics, banking, and finance. He is heading the Department of Rural Finance and Development since 2012. He has conducted more than 150 MDPs, EDPs for national and international banks, financial institutions, and government departments. He has trained more than 7,000 senior and middle level executives of central banks, development banks, development finance corporations, commercial banks, and cooperative institutions, including banks dealing with development activities and government officials engaged in development planning activities of Africa, SARC, CARICOM, IORA, Southeast Asia, and Middle East Asia. He has conducted many research consultancy work for national and international agencies like World Bank, UNICEF, UNDP, ILO, ADB, GIZ, Germany, Commonwealth of Learning, Canada joint research work with universities from UK, USA, Germany, and Canada. Ministry of Finance, Government of India, Ministry of Agriculture, Government of India, Reserve Bank of India, and NABARD. He has published 4 books, more than 15 peer-reviewed research articles, working papers, and monographs in the domain areas of research. Editorial boards in many internal journals as reviewer and editorial team member. He was working as consultant expert to international banks, Government of India, and state governments. RT, welcome to you, sir.
Thank you very much. Thank you for the opportunity. I think, yeah.
A warm, a warm welcome to Reverend Father Michael Santumaya, Principal, Milagres College, Professor Shivaram, Principal, GFGC, Kavoor, Reverend Father Arun Wilson Lobo, Principal, Padua College. And also a cheerful welcome to Professor Manoj Lewis and all the attendees of this 5-day faculty development program. Welcome one and all.
A warm welcome to you too, sir. Now it's the time to sit back and listen to our resource person. Over to you, sir, Dr. Naveen.
Yeah, thank you very much. Thank you very much for the opportunities. I think sometime now maybe a year back, we had, I think, a similar session with the Milagres College and other associate college, including Government First Grade College, Kavoor, as well as Padua College of Commerce and Management. It's, I think, once again, privilege to me to be part of this discussion. Uh, I have prepared a couple of ideas or the emerging areas of banking. However, what I thought, I'll take a couple of questions in the beginning so that my presentation will take to the real path when I discuss a couple of things in the banking. So I given once again, it may be in chat box, or even if somebody can switch on the mic, if you can have a couple of questions in the domain of banking. Once again, as per my comfort and having the knowledge in that areas only, I may be able to answer a couple of questions. Then I'll, so what you call, kind of fix on a context where I'll take to in the recent changes, emerging areas which is coming out in the areas of banking, which we'll discuss. I hope that will be fine, and take a couple of questions, Manoj.
Yes, thank you, Dr. Naveen. I
Yeah.
think I would like to know a little bit on this UPI, which we are talking about, that 1% or 2% that merchants will be charged, because there was a lot of, notion among the people
Yeah.
that
Yes.
we may go back to, cash again. So
Yeah.
all those issues, that is one major area that I would like to,
Okay.
get a little clarity upon. And
Yes.
obviously, the latest in technology in banking, QR code was, I think, one. Is there something new that is coming in that RBI is planning? If you can put your thoughts on that too. That's
Okay.
all.
Okay. Sure. Sure. And any other participant has any other questions which will be related to banking? If you can put up in chat, or even for any of your questions, please. Then I'll proceed. Then also we'll give a time for question and answer. If you have anything on that line. Any questions? Okay, no questions as of now. Manoj, they are able to open up the mic, right?
Yes, sir. Yes.
Yeah, okay.
The delegates can yes ask for the
Yeah,
questions.
if they have any questions, please. So that I think it will be better for me to understand the requirement. Since we are in a virtual mode, my way of talking or delivery should not lead to confusion for the participant also.
Yes, sir.
Because once I go to the presentation mode with this, I cannot see the participants if they have anything also. So you are seeing the PowerPoint, right?
Yes, sir. We can see the PowerPoint.
Okay, okay. Because your tab mode is not working. I think in tab mode is, otherwise I would have gone to tab mode. So that is not working. I don't know. It is not working. It's fine. So I'll go full screen. Window also not working. Window will work with this only.
Just now the screen was visible. Yes, sir. Now it is visible.
Okay, only I cannot see any of the participant, even questions are there or nothing I can see. So that is a disadvantage with the presentation. Okay, so I have to come back and see any questions are there. I think, okay, as of now, only the question.
As of now, no questions.
So what I'll do is I'll quickly glance through a couple of things. Then if questions are there, please stop me anywhere. So that doesn't make any difficulty. And this presentation will go minimum, say, one day. So I want to cut short as and when is required. It can be 1 day discussion. And this is what I do for almost 3 days training program. So that I don't want to make a lot of PPT in that level. I'll only within this selected PPT I'll discuss. I did not cut short some of the PPT because if it is required, I want to go back. That's why I'm not minimized. Now, a couple of things. I think one important question which Professor Manoj asked is about the UPI. Uh, so I was today morning also I was discussing with the NPCI, whom I know and very close to me, with the senior executive. So I had a discussion. Then it was very clear. As on date, there are no charges for merchants, and now future is not known. So there was the first answer. Second is within UPI, if you are using PPI, that is your wallets. There are when you load the wallet, there is a small charge it is inserted there. That is there. Now, when you use UPI, suppose say you are paying a fee or you are booking you are paying for credit card and other things through UPI, then there is a processing fee. I think 2 days back, I was paying school fee through UPI for around 40,000 rupees for one installment of fees. UPI has charged around 3 rupees 44 paisa. Okay. So this processing fee and a GST of 0.34 paisa is charged for the users, not for the merchants. It's another clarity. And these are the interoperability charges. It is there for all modes of transaction, whether you use credit card, whether you use internet banking, or whether you use debit card, or whether you use UPI also. This is a small, maybe compared to credit card, compared to internet banking, debit card, this may be very small segment of fees levied in there. But when you use for PP, that is P2P, person to person, or person to M, merchant also, both for receiver as well as for the sender, as of now there is no fees. But now how this cost is taken care, right? This is very important. Free means, is it a we talk in economics, thus there will be a free lunch for everyone? No. As of now, MeitY is taking that is the Ministry of Information Technology, is taking care of the cost of initial infrastructure, what you call onboarding as well as interoperability cost. And it may not be like lifelong. I don't think it will be lifelong. This is only for an establishment time. MeitY will take care of the initial cost. There may be user cost and interoperability cost. Today, interoperable cost is very high. For example, if you use, you have seen ATMs, right? ATMs, I'll give a comparative picture. ATMs of a, say, public sector bank, as well as which would have maybe had in earlier days very less number of what you call ATMs compared to, say, Axis or HDFC and other banks. Now, those banks which had more number of ATMs to earn a lot of money because of the interoperability. Because a person from, say, Canara Bank is using an ATM in HDFC Axis, the bank has to pay interoperability charge to the Axis Bank or HDFC. So these costs are very high in those domains also. And it is not that it is cheaper. And that's why the banks have restricted on minimum cash usage, because if you use more than 3 times of ATM or cash withdrawal, then you have to charge, because that up to that banks are bearing the cost. Through your account management. There also it is not free. Once again, your account management, you will be paying a fee for the banks annually or quarterly or half yearly. So in a way, it is I was discussing, or I think I was searching, and he was updating me. This information is also provided in NPCI, but I could not get that exact press release of NPCI. However, as of now, it is clear that these are initial media news only as is available. Other than PPP, that is your wallets, okay, no charges are levied. So this is first reality. I was also having another talk call, but I could not connect today. Maybe he's a technology person once again in NPCI. So you'll be having fair idea. If anything further comes, we can still understand the nitty-gritty of the charges and other thing. And merchants also, in my knowledge, it is not charged as on date. You can once again correct me if any merchants are charged. You ask the merchant, did you any UPI charges are there? Interoperability charges or processing fee may be there. That will be there for all kind of financial products also. Okay. So moving further, now when you use technology or the recent technologies which has come into the banking domain, which is what you call contemporary. Now there are 2 dimensions are there for the banking. One, we have a conventional models of banking which used to be led through the branch. Branch is a larger business source for any bank. And today, with the technology, it is not the branch alone is having a source of business. There are a lot of technology enabled what you call intermediations have taken place with the banks, like the fintechs or open banking or other what you call on lending or co-lending models, which are enabled through NBFCs and etc. So this dimension of bank operations itself has changed over a period of time. And within physical banking to an invisible technology-led bank like open banking solutions, which are there in advanced countries for many years. And if you consider India, these are the very recent phenomena where the open banking systems are evolved over a period of time. And that these banks are competitively advancing with their technology in customer onboarding, in along with that making the procedures easy, and also they are adopting a lot of technology enabled tools to see the risk, right? So risk is an important perception or important ingredient to lend also. So you have to understand how much risk will be there for underwriting credit products. So in that domain, technology played a critical role. Our technology is going to play a very important role. And in this line, a couple of new advancement has taken place in last 2 to 3 years. That will be very interesting for which I think the faculties who teaches in the banking in any colleges or universities, it needs to be updated that how these the conventional models and the new models which are coming through the technology or digitization is going to transfer entire banking models as well as the system of bank management, right? That's where entire areas will be coming into. So technology also impacted largely on the, I always say when the bankers or to the students, our banks is to serve only around 30-40% of population in the country for long time, right? Even 69 to recent past, we used to serve only say 30-40% of population. There also, if you see credit and couple of credit products, very limited credit products and very limited savings products. And other markets, capital markets, or you say this insurance markets, pension markets are invisible kind of thing. Their impact on the large economy is very less. So when we talk about banking and the economic growth or economic development from that idea, so banks' relevance is not seen, or banks were not got into deeper pockets of rural areas or including slums or semi-urban areas, rural agriculture sector, micro enterprises area. It could not reach to traditionally excluded segments, vulnerable groups, minorities, and many areas. So then there was a problem with the branch-led models or the bank's conventional models itself. It's good to reach a number which are maybe or people which are able to access there, but there are large number of populations, millions of populations are not in the conventional banking models because they don't want to give any documentation, or they don't have a documentation, they don't have an address proof, or they don't have an authentic identification as a KYC for them, right? No, your
Naveen
customer.
sir,
Yeah.
Naveen sir, are you presenting, sir?
I am just put up a PPT. Is visible? No.
No. You have not shared your PPT.
Okay, I have actually shared. 1 minute. What I'll do is there is a problem with the Google.
Now, no. You share that, sir. It was perfect.
Okay, 1 second. I'll. Problem is once I share, I cannot see the screen also. That is a.
No, at least you can minimize and keep it. That should be visible.
So you are able to see now?
Yes.
1 second. Yeah. It has come?
Yeah. It is visible.
Okay. So what I'll do is, okay, I'll keep it full-fledged only, as you can stop me. So I was discussing about a large number of population which was not conventional models could not reach out. So digitization was the prime requirement in that line. So the entire journey of Aadhaar authentication started around 2011-12 onwards in the time of UPA government, and later progressively advanced through 2014. And that has led to millions of account opening in the banking, what you call banking sector. and this has facilitated to also not only banking sector, it's also helped in insurance and pension sectors also equally, and even capital market in that way, because people would even get into derivative products and etc. Through these areas, like they want to edge their agriculture commodities or even go for future commodities and etc. So these areas, it has helped in reducing that kind of asymmetries in the sector. So the major, if you see entire advancement which took place in the recent past, which was led largely by after NPCI, and NPCI has gone global. Now NPCI through the international, their internal institution, there is a separate institution under the NPCI which helps more than 14-15 countries in the world on rolling out various digital cards as well as digital infrastructure, particularly for the payment infrastructure. And this has a larger impact in India also, and digitization and digital areas, which has it's once again as a driver for the banking sector or financial sector in India. And globally it is recognized one of the best use case for World Bank, or even whenever you see World Bank and other places, India is placed very high because of the Aadhaar or the biometric authentication, as well as the government program like PMJDY, and integrating lot of government schemes in that. And you'll be surprised. I'm going back to my presentation. You'll be surprised if you go to DBT site, direct benefit transfer site, and you'll be surprised to see that. I hope you are able to see the screen, right? Manoj, you are able to see the screen.
Yes.
Yeah. So if you see the direct benefit transfer, this has happened only because of digitization and with the technologies which have come into the banking and financial sector. Today, 312 schemes are integrated with the digitization with the banks, 53 ministries. And if you see the exchequer gain, 2,73,000 crore. These are actual estimations of gain, because these are the leakages we'll call, maybe in the gas subsidy, in fertilizer subsidy, because earlier identification of customer was largely a conventional model. There are not much digitized model. Today, suppose you may be knowing this farm PM Kisan, which money comes 6,000, it will be directly remitted to the bank account, and there are no other leakages. So there were, if you see the total direct benefit transfer, it is around 6,23,000 plus crores of rupees is it is routing through the digital systems, right? And you imagine like banks like SBI, or in the case of even big banks or even smaller banks in public sector, in daily based. And I request all of you to just get into this site, and there you can even write some research paper, because the state data and other things will be available. So I'll go back to the PPT. So this I just to show that now if you see this much of crores of rupees coming from G2P, that is government to person, is to the digital modes. Now one click, millions of debits and credits takes place from the government accounts to the person account. And this will be possible only with, and it's also in a fraction of seconds, right? And this much of hit, like a large population country like India, 1.4 billion population, you need to have very, very sophisticated digital payment infrastructure gateways. Otherwise, there will be a lot of failures which we used to experience earlier. And if you see the current time, the experience is still better, and we see the failures are very, very minimal when you make a payments, and failures will be minimum. So that means how robust is the technology developed over a period of time. And I think people who teaches innovations, entrepreneurship, or economics particularly, innovation is a very critical component for any development. So digital innovations are very, very important in banking sector, and that's where we are proved. And that could happen with these three layers. I think last time also we discussed this one. I'll just touch upon on this, and then I'll move on to the other technology. So the identity layer, which is a paperless layer, which we are seeing today, including a couple of states today, lending to farmer is taking place without any farm records. That means entirely it is through the land records are digitized, and farmer is got a loan on his land, or based for we call KCC, or in the Kisan credit card, or even farm credit. based on the land or land crop, based on those scale of finance, and that will be lent because of the digital data, only digital data. Farmer need not carry anything, he just goes to the bank branch or through the application. Many banks are routed out to the application, and RBI Innovation Hub in Bangalore is doing a large scale KYC innovation for all the banks, and initially now it's a pilot is going on. So what will happen, without going to a bank branch, a farmer can get a farm credit through giving his land records digitally, and it will be what you call mortgaged, in the sense the authenticated, and say bank Canara Bank finances to a farmer in Mangalore, and same person goes to Karnataka Bank or to say another bank, SBI. He cannot get loan because SBI or Karnataka Bank can see it is already financed by Canara Bank, because it's the digital, because that land is that get automatically pledged, right, against a particular bank. And earlier it was not possible. Same person can get a loan from one bank, and with the some kind of duplication he can go to another bank also to get loan also. It used to happen. So these kind of double financing risk mitigation strategies are very less in earlier days, and which is coming promptly in a digitized model. And payment layers also, as I told you, interoperable systems, very fast, very cheap, and what we used to pay earlier, what we are paying today is a huge differences. What is to pay for a check clearance, or in the case of time which was taken for in clearance, is today in a minutes, not say in a seconds, fraction of seconds we get the payments done from both the side. It may be government, it may be a bank, or it may be a person, right? Person to person, or person to bank, or bank to person. So all these are taken place with the digitization, and that is enormous what you call technology inbuilt for the payments and payment infrastructure. Now, if you see the last layer there, where the ONDC, DigiLocker, account aggregators are working on, data layer, data empowerment to enable secure sharing of data. Now, this is what it's today's contribution or discussion for you. Now, all banks has a data, but this data is not interconnected with the banks. There where the ONDC or OKN or the account aggregators plays very, very critical role in sharing of data. And with the sharing of data of a customer based on customer willingness, once again I'll quote and unquote, it is based on customer willingness, he'll be able to able to or the bank or the institutions or account aggregator able to derive the risk of a customer or a risk of a borrower through his multiple data points which is coming together with an account aggregator. So there were this layer is now it's coming very important, and there are much work is going on that side. I have little more detailed discussion on that. I'll come out with that. So this is the journey of entire NPCI in various time, and the current time with the UPI as well as the CBDC, which is a central bank digital currency, which is launched. There are newses that it will help some millions of population in the future time. We have to see that, because this is a pilot phase now, and acceptability should be there. I'll also discuss some amount on CBDC also. So there are various approaches used by, in the case of NPCI, to various touch every Indian with the digital payments. So this is how critical bottom-up approach is made up. And if you see the bottom layer, 430 million people who don't have mobile phone and depends on DBT, direct benefit transfer. For them, it is very important how best they can have banking without difficulties of going to a branch, distances, inconveniences, transaction costs, and also rent-seeking behavior by the middleman. So that is a very, very critical component in banking, where a middleman enters means there will be rent-seeking behavior will come, and rent-seeking will lead to economies of diseconomies of scale, as well as it will also lead to lack of trust and the faith in the system of banking and financial system. So you need to build a model of banking which needs to work without much of internet, without much of smartphone. People are not able to operate smartphone or even digital devices, etc. can it be delivered with the which feature phone, right? This is where every Indian may be having a feature phone current time, or at least 90, 96, 97% of Indians may be having a feature phone at home. So that means you need to deliver that kind of product, financial products, that convenient safely to the customers without even having a smartphone. That is a critical point where NPC has developed these AEPS based. AEPS means Aadhaar enabled payment systems, where with the biometric you can give that one, as well as the feature phone can roll is already rolled out, which will enable for payments with the banking system. That means largely we may be using smartphones or for the digital payments. Feature phones also can be equally utilized for the payment or remittance receiver receiving or payment paying of anyone, any even government or even merchant or to even a person also. Mid layer, another 500 million people have feature phone, and there where we are targeting, and bottom layer as maybe difficult to enable them, where you need to give them feature phone facilities or enable them to go to that kind of safe way of doing transaction, or at least AEPS based agent models has to be enabled for them. They will come to the agent, and to serve them the bottom layer. Today we have close to 16 lakh or 15 lakh plus agents in the country. Agents are BC agents, we call. They are the banking correspondents. That means bank recruits or appoints a corporate, a company, which may be an NBFC or company which is working, or even sometime NGOs, like best example SKDRDP in Dharmasthal, which is working for many of the banks as an BC corporate. And they will recruit an agent, the corporate will recruit the agent, and they will do the transaction on behalf of bank, and it is connected to the banking system. So that is where whenever bank branches are not able to open and it is not profitable and it is not even having a scale, like 1000 population, 2000 population, branches will not serve those locations. So that is a compulsory financial inclusion plan from Government of India as well as Reserve Bank of India. Under that, they have to operate through the agent model. And today, the agent model is close to, as I told you, around 16 lakh in the country, including a merchant is also coming under the agent model also. He is operating, he do the remittance services, he receives, he pays, all these things can be done for the bottom layer. And bottom layer is largely illiterate, and they are not much complacent with the digitized models of lending or instruments to use. So they'll be still depending on some person like an agent which has to operate. Just to add on, I work with a couple of international organizations, World Bank as well as Commonwealth of Learning, in developing capacity of agents. So we are having pilot projects in the state of Tamil Nadu. So second phase of project will start from this month, and this will be rolled out entire country in the next year. That will be 24th, large scale. So agents also will be an important component of banking in India in the coming days, and they also work like a say mini banker in their local areas to operate all kind of services, around close to 40 plus services they'll be able to deliver at the doorstep of the people. So this is another segment which is coming digitized. This is called digital financial inclusion. So there the technology is there. The micro ATMs you'd have heard, or they use a small kind of devices where the device takes automatic Aadhaar enabled device which connects to the Aadhaar, that is UID. Then it also connects to the bank, that is a bank interoperable system, and multiple ways you can remit, debit, all these payments to say utility and etc. can be done through the system. Then top layer is another important, where you and me uses lot of payments today. I think most of our payments goes to with the digitized smartphone based or card based systems. This is what the latest innovation UPI 123 for the pay, which is once again feature based phones can be utilized, and its entire layer of technology which is used by NPCI for this. And globally, it is now recognized one of the innovation to do the what you call transactions. M-Pesa in Kenya has done kind of a digitized level of reaching out to what you call the people in the rural area or in the enterprise based, micro enterprise based areas. So the feature phones has to be enabled for them. Without even internet, they can operate the banking. So this is the model which is coming in. Domestic remittance. I'll just now comes to the recent years. RBI also launched an e-rupee. Earlier, if you have heard a e-rupee, I wrote a piece also sometime back on e-rupee and opinion. So e-rupee is once again the institutions like a college wants to pay a student 1,000 rupees as a say gift, that is, or say you are giving him as a prize 1,000 rupees. So he'll go and take something, like he may eat an ice cream, he can take some toy or something, some book or whatever. But you want to be very particular, you buy only the book, say for example. So in the e-rupee kind of model, you can determine what needs to be, where needs to be spent. Like a farmer wants to purchase a fertilizer and government gives 5,000 for fertilizer, he can use only for fertilizer. So that's what the component of e-rupee has come, and it's a definite use, and it cannot be accepted in other places. So this has a definite use, and as of now, it's once again under pilot, and it also has a very good digitized way of acceptance and use also. Here it is like a call as a tokenization, but it has the value and it's equivalent to rupee, and there will be acceptability because it is routed through Reserve Bank of India. So suppose I have a e-rupee coupon, I can go and give to a say shop where it is designated to give. If it is a fertilizer coupon, I cannot go and use in a liquor shop or in a wine shop or in a hotel. So that is the limitation of that, so that the purpose will be clear and diverse. We call in banking diversification of fund, or you also in management would be teaching, or in banking also diversification of resources will be limited because of this, and that is the purpose of this e-rupee, to bring to a particular use it will be done. Then comes digital cash. Once again, the rollout of the recent rollout of CBDC, which is another important area which CBDC is looking into, and it's a digital currency, as you know, and it is backed by Reserve Bank of India, or in the Indian case, it is the Reserve Bank of India, or many countries today already gone with the CBDC, central bank digital currency. It is equivalent to fiat currency, what we have cash, equivalent to that, and but this is in a digital form. Now, there are a lot of advantages of having this, what you call, instead of sovereign currency, which is printed, right? This will be in a digital form, routed through the, you have a blockchain technology, and it's you have also components which will be safety and other aspect will be taken care, as the Reserve Bank already it has done in that line, so that it is a safe and also secure. Now it is an advantage for the economy to use this kind of currency, because the printing and safety, protecting of currency, safeguarding currency chest in any place, say in Mangalore also, it has a huge cost for the banks or the financial system, ultimately for the country. I think it is sometime it was 4 or 5. I am roughly, I'm putting up this number, 4 or 5% of the GDP, maybe more also. It's a very, very costly effort for cash management. So replacement of that is the CBDC, central bank digital currency, which is safe, as well as it will be equivalent to what the currency does, equivalent to that, including the changes and other thing. And it will be done through the wallet, and wallet will be, you can just recharge the wallets with your bank account and use that recharge, and you will not get any what you call interest on the wallet for the keeping currencies there. As and when you need, you just take that currency, and this is the digital currency which is already come with the Reserve Bank of India. Okay, I'll just skip couple of things. I'll skip. Yeah. Yeah. Second important thing which I was discussing earlier is account aggregator. Now, account aggregator is another very large scale revolution in India, and it's going to be very, very large scale impact on the banking financial sector also. It's not only banks, even financial sector. That's why other regulators we are able to see SEBI is there, IRDA is there, from insurance, pension authority is there, FERDA is there, and others also, like your employee provident fund and many, including the taxing system, taxations and etc. All these are integrated with the account aggregator. Now, these account aggregators, just to give an explanation on this with the common man understanding for this, is nothing but, suppose we are now around 70 people are there. Each one may be banking with the difference, right? You may be, I may have account in 3 banks, but bank A may not be knowing that I am kept in bank B or C, my deposits, my loan. Sometimes loan may be known because of your credit records, right? But many times your deposits and other commitments may not be known. So in account aggregator, what happens? All informations comes to an aggregator, and it is with the your details like your Aadhaar number and other things. So all banks can fetch that information and make a appropriate decision. So you can see what will be the impact of this kind of aggregation of information by all banks and financial institution. Like a person is having, say, demat account, right? So that will come into this picture of getting into merged with the data aggregator. So personal finance tools will be developed. Financial advisories can be done. Advisories or robotics, which is already there in the banking. Wealth management tools are there. Retail loans, which are paperless. I think many of the announcement is already there in the segment. MSME loan originations, reconciliation is easy. Cash flow based lending, digital cash flow based lending, particularly. I think cash flow based. You would have seen working capital management as well as cash flow based is a critical segment in a business management. Largely banks, financial institutions. Now some of the new areas which is coming into the banking is how digitize these cash flows, right? To digitize the cash flows, you need to know that how best the cash inflows and outflows are understood of an entrepreneur or a business. Then you are able to devise or underwrite the credit products for accordingly for that. And there were digitization of various information of the customer is very important. Suppose I am paying a GST to a commodity, and that has to be merged with the account aggregator, and that comes in the cash flow based lending, what you call credit risk rating tools. So that will help, including monitoring. It will help for the newer banks to launch new products also. This will be another important segment which is enabling for a lot of what you call fintechs and banks are working with the account aggregators. One is bank has to give data. Now, what will be if a bank, say State Bank of India, has lakhs of customers, crores of customers, not lakhs, crores of customers in that fold. Now, giving that, they will also get another couple of crores data of same customers as well as other customers' data in account aggregator, and they are able to develop best models for their own customers or new customers to offer new products with that. So that is what the account aggregator will help for the many of. Then comes public credit registry is another important area which is coming into to keep the data credit registry in a single forum, so that it will be enabled for various institutions to know the what you call entire management of the credit also. And this is an once again building block on the credit data, which will be beyond the current models which maybe CIBIL and others are doing. And this is another what you call important initiative, the PCR, which is coming for once again to make the registry more effective for that. So so this is the entire components logical flow of the CBDC. And CBDC has, as I told you, it will have huge impact on many areas, and also as a challenges because the confidence, trust on the digital currency needs to be built on, and you need to also very much careful about the safety net. Earlier, cash management means it is to a particular exchequer or particular what you call currency chest management. It is not now a single place, right? Digital means you are wide varied. It lead to a lot of other nuisance in the safety and cyber security point of view. So it has to be, the technology has to be blended with the lot of what you call use cases, and enabling from that to develop a much sophisticated digitization. That were the challenges comes into from the adopting of CBDC. And if you see the data today, a lot of central banks have already pioneered in the CBDC, and it will be future of many of the banks, including in India. And I think coming days, we also may be using the CBDC instead of currency in our wallet, right? So it will be easier than the currency carrying, and less risky also if you are able to protect the digital wallets. So this is yeah. So this is just what you can see about the CBDC. This is a once I think Governor had a question and answer from media. I think he answered this one. Is a legal tender issued by the central bank in a digital form. It is the same as a fiat currency and is exchangeable one to one with the fiat currency. Only it forms is different. That means you have a paper, here it is a digital. That is the only difference. Otherwise everything is same as what it works in the case of cash. And also the safety sorry, the what you call privacy after. So your wallet is privately kept and there is no data other than RBI can see the that wallet data, and that is the only currency you can what you call the privacy is seen in that. So this I'm just excluding. Yeah. So there are many. I am not going to blockchain because that will be leading to another discussion. So I don't want to. And yeah. Now APIs are once again made a large amount of changes in the entire what you call digitization or digital innovations in India, and that is nothing but application programming interface, which enables once again your all kind of the digitization of the applications, the softwares and etc. So and also interconnected with the technology in various facets also. So this is how the APIs is enabling for various applications interconnection, because say SBI uses Finacle, some other banks uses another technology. So interoperability has to be derived through the APIs, right? So that's what the backbone of entire operations of that models. And today we also listen or hear from a lot of things on open APIs, which is also coming out to enable the third party what you call developments in build applications to service around the financial institutions. And here once again the challenge is how the transparency and other aspect is managed. Open APIs, particularly when you talk about to the new banks and open banks, etc. So those places once again it comes how best the open banking models will be enabling for further banking and financial services in the country also. And open banking or the new banks are going to be the future of India also. We cannot neglect them. At least 1/3 of the population will be depending on them, minimum that much in on open banking kind of things, where the people like you and me may be seeing that how best customer services are given, how best the transactions, mapping of transactions are taken place. Those places, I think these systems are going to work. And there are many use cases which have come out in the recent past and using of these models also. I'm not going very detailed on this with the limited time. I think, these are some of the use cases. This is the account aggregator. This is how it works. You can see here. So you and me as a consent is a customer, and there are various intermediaries on the left side. You can see bank, mutual fund, insurance, and they'll give the information, and it is pooled data in account aggregator or an NBFC which is rolled for that. And this will enable through the open APIs or through the applications, and those data will be extracted for designing or devising various credit products, insurance products. You can think of anything, even wealth management, personal planning. So many things can be developed. Suppose, see, simple example, if my account has or your account has say 5 lakh rupees for many months or years, and you are not using that. So this account aggregator will give information, and through the personal finance management, you see that your account has this balance. You will come out with an advisory. Can you put this money in these places and you earn something? If you want to do that one, then you can opt for those services if you are agreeing that. So these are the things. Without your knowledge, the developments will take place, underwriting will take place, new product development will take place in this in the areas of. I've given suppose people say there is a businessman is doing a lot of business only from GST data. Somebody is able to understand that he is paying a lot of money or taxes to the government. Now from that data, they will develop the credit tools, underwriting tools or risk management tools. or we call credit rating tools, right? So that will be developed. So the Open Credit Enablement Network is OCAN is another important innovation in the recent past, which is taken up for the standardized API to connect the lenders and LSPs for the real-time small ticket invoice-based lending. And like MSMEs will have a larger benefit out of this, because this will enable the what you call connecting the data from the various points and bring out the new ways of lending to the sector or segments or the enterprises. So you can see standardized loan origination as well as collection process are possible, and OCAN will bring that dimension. Who is your customer? Suppose you are MSME owner, who is your customer? 100 customers are there. So all this data will come together and the collection will take place through the API or the application, and it will manage for you. So this is the beauty of that. So it will be also true in the case of farmers who is selling of these commodities also. I think somewhere here I'll stop, and yeah, I think it's another 8 minutes is there. So there are lot of use cases are there in the PPT. I don't want to, including both you would have heard, the chatbots and etc. AIs are applied in many of the banks, artificial intelligence. Today, many of the banks, robotics are already involved in the banks for credit management and even in loan origination also. Other than that, the what you call if you see the entire process of the data visualization is taking place in many ways in farm sector or in MSME or in the corporate side, retail segment. A lot of data convergence is taking place, and that is helping for the lenders, to the banking and financial sectors to come out with the new products and also develop some kind of innovative products for the customers. I'll stop here, and I think 7 minutes are there, 6 minutes are there, so that I can take a couple of questions. There are a lot of use cases are there. I think that much of time to spend for that, maybe with the limited, so we can take a couple of questions. Yes, Manoj.
So I request the participants, if there is any question, so you can clarify your question.
No, there is something called e-money.
Yeah.
I wanted to have that, but then I think RBI released it only in select few cities, not across India.
Yes.
Any specific reason for that?
These are pilot, Manoj. These are pilot. This is a test phase, and it is only with a couple of customers, maybe some thousands of customers, maybe. And to see that, first thing is that you have to see the backend infrastructure is capable of taking care of this one, safety and operations and etc. And you would have seen that screen. These are the digital virtual currencies. It's exact the same thing will come in the wallet also. And once generally these are the testing phases. Not only India, many countries today are in testing phases of this as a pilot CBDC, central bank digital currency, or you call e-currencies, right? So this is a pilot, and as the pilot success, there may be learning from the pilot. The challenges would have faced, failures may be there. With that, they learn that, and they enable the system. And when the central bank launches, it's not like a bank launching, right? Bank can call for immediately, but central bank many times, since it is a central bank, it cannot be called for immediately, right? So there were, I think, RBI has to look into various other aspects also, the criticality of that. So it's always done through the pilots initially. Yeah.
Thank you.
Any other questions? Okay, fine. So I believe there is no question from the participants because it was very informative and it is very understandable, sir. Therefore, I believe there is no queries and there is no questions from anyone. Everyone are very much satisfied with the explanation what you have given, sir. Thank you so much, sir. So now we have come to an end of the session. So it's my pleasure to give a vote of thanks. My very special thanks to the resource person of the day, Dr. Naveen, for sharing his knowledge and spending his precious time with us. Thank you so much, sir.
Thank you.
I take immense pleasure in extending my sincere thanks to Reverend Father Michael L. Santumayer, Principal, Milagres College, Mangalore, Dr. Shivaram, Principal, Government First Grade College, Kavoor, and Reverend Father Arun Wilson Lobo, Principal, Padua College of Commerce and Management, for helping us to organize the session. I extend heartfelt thanks to all the participants for participating in the session. And I'm very happy to extend my sincere thanks to Manoj sir for helping us to organize the session. Thank you. Thank you, one and all.
Thank you.
So feedback, all the participants, feedback link will be. Yeah, sure, sir. Sure.
Thank you, Naveen sir. I think
thank you once again. All the best.
You need to move quickly, or else you'll find traffic on the Hyderabad highway.
Yes. No, it's heavily raining, so I have to.
Oh, really? Okay.
Yeah. Yes.
We want rain here in Mangalore because of the heat.
It is humidity is around 38 today.
Okay.
So it is raining now. Yeah.
All right. Take care, sir.
Yeah. Thank you, and all the best for everyone. Yeah. Thank you.
Thank you, sir. So feedback will